Short-term volatility is affecting markets, including gold and silver. Let's look past today to what experts say could be coming: rate cuts. Before we begin, remember to like this video and subscribe for more economic updates. Last week, more dovish remarks from Fed Chair Jerome Powell came in the face of worrisome economic data. This past Wednesday, the Federal Open Market Committee left interest rates unchanged for the 8th straight time. But in his post-meeting press conference, Jerome Powell said that if the data continues to cooperate, then I think a rate cut could be on the table at the September meeting. Almost as soon as Powell said he needed more economic data to justify cutting rates, he was hit with a wave of it. Last Thursday, the Institute for Supply Management reported that its widely followed Manufacturing Purchasing Managers Index fell in July to its lowest level in 8 months. The same day, the Labor Department announced that new claims for unemployment benefits the week prior surged to a near one-year high. Then, on Friday, the Labor Department was back to reveal that non-farm payrolls increased by just 114,000 in July, while the unemployment rate increased to 4.3%, its highest level in more than 2.5 years. The wave of concerning data last week set off alarm bells on Wall Street, warning that the economy might not have escaped recession after all. From Thursday to Friday, the Dow Jones Industrial Average fell nearly 3%, while the tech-heavy NASDAQ tumbled 5%. By the end of last week, traders said there was a 100% chance of a rate cut in September, including a 75% chance the Fed would cut rates by 50 basis points next month. Referring to the potential impact of last week's data on upcoming Fed policy decisions, asset manager Adrian Day said, "At his press conference earlier this week, Fed Chairman Jerome Powell was almost champing at the bit to cut rates, but waiting for the opportunity to do so. He now has that opportunity. In the last several rate-cutting cycles, when the Fed starts to cut rates, gold moves up," said Day. A number of analysts say profound optimism over possible rate cuts was the principal source of momentum supporting gold last week. Many also suggested the metal found additional strength in a geopolitical risk premium triggered by the killing of the leader of Hamas. By the end of last Friday, gold had risen roughly 4% on the week to a price approaching $2,500 per ounce, and had seen its third record high in less than 3 weeks. From the beginning of the year through the end of last week, gold had appreciated 20%. Analysts are especially optimistic about gold because a more favorable rate environment may unfold at the same time as heightened geopolitical tension, which is historically a reliable source of gold price support. On that note, George Milling Stanley, chief gold strategist at State Street Global Advisors, said last week, "There can be no question that geopolitical uncertainties surrounding the conflicts in Europe and the Middle East, coupled with continuing belligerence from China toward Taiwan and an increasingly ugly U.S. presidential election, still encourage investors to seek increased exposure to protective assets such as gold." Well, there you have it. Tons of volatility, bad economic data, possible rate cuts, and big investors buying gold. Keep watching to keep track of what's happening.